Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Apple report for Thursday, January 11th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the chart. Start with the big picture. We'll work our way into the day itself. Just a reminder that we're still in the midst of a long-term show of strength in Apple, having settled above these channel tops that are well below the market now, 163.89 to 165.31. We closed above them last May, fell back to them following that July high, and tested them twice in about a month and a half. And the most recent one, I think that was in October, we came off of it nicely to a new all-time high by a hair, only to fall back. We did, by the way, on the way up, following that most recent test of the 165.31 formation, closed then above this 180.15 descending channel top, which is considered secondary long-term support now. We did test that last week, and it was considered, a 2 to 3 week sell signal below a channel structure that is like way above the market now in the upper 190s. But I'm not going to go back to all that. I just want to clarify that 180.15, meaningful long-term support. We tested it last week, and above which 190.95 remains a 2 to 3 week upside objective. 190.95, nothing more than a descending 2/3 speed line that is based on that recent high from December against the more recent low from a week ago. 190.95, a 2 to 3 week target above 180.15. We did close a few days ago above the high of the low of 182.76. That offers decent intraday support. You might even bottom out here for the day itself. And following that settlement, have been anticipating this 187.60 3/8 upside Fibonacci, which I think we're likely to test today, can contain session strength. We might actually fall away from here through the rest of the week. And so, I'm putting that out there for 3 to 5 day swing traders who may have bought the low 180s 4 days ago and are holding out for 187.60. We could fall back perhaps into the low 180s again by the end of next week. But, I do think that having come off of long-term support, you should be, I do think the market is likely to continue to the 190.95 descending 2/3 speed line over the coming week or so. And if we do close today above 187.60, I think by the end of day tomorrow, Friday, we should test 190.95. And this is the level that, if you're like a 2 to 3 week swing trader, can contain buying on a weekly basis. And from here, we could fall back into the low 180s again within a couple of weeks of testing 190.95. But I'll also say, and I'll just take you back to that weekly chart, that having tested this channel, we should rally back not only to that recent high back in December, but even then some. There is a new channel top climbing in the 205-210 area, and once again, I'm sorry, I don't have it constructed just yet, but you can see, I can say, and it's not going to happen today, but if over the next few days we do close above 190.95, well, first off, there's no good reason to then be short Apple if your time frame is 2 to 3 to 3 to 5 weeks, because then I am expecting, and if you can imagine a trend line off these lows, and then a channel top parallel with that climbing should be in the 205 area and climbing. That becomes a 3 to 5 week objective if we settle above 190.95. 180.95. I'll also say that merely holding above 180.15. I mean, if you bought 180.15 last week, I'm not quite sure, obviously, what your time horizon is, but if you're a near-term investor, 2 to 3 months out, you may well hold out for that channel top that is around 205 now and climbing to 210 over the next month or so. So closing above 190.95 should accelerate that to within 3 to 5 weeks. And that is kind of the big picture to the upside. Downside, I'll just say that closing today below 182.76 indicates the 180.15 level again tomorrow, part of a range down to 179.32 that once again can contain selling through next week, through February, and possibly into later year. If we were to close below 179.32, not going to happen today, then we've got another day or two where we test 176.19. But if at the end of a week on a Friday we close below the 180.15 formation, the market should continue unwinding over the following 3 to 5 weeks back to this long-term support area in the mid 160s, where we can once again bottom out through the rest of the year. I'm going to leave it at that. I think I've pretty much covered it for the day. I'll leave you with this chart. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. We've already put out 2 stock picks this week that you can see. We've got the daily triple Q, daily SPY analysis, and you can see it all for free for 5 days. If you don't like what you see, you can bail for no cost to you whatsoever. But the likelihood is you'll stick around, in my opinion, because you'll see the value that you get for a very reasonable subscription price. I'm going to leave it at that for Thursday's Apple Report. I'll be back tomorrow, of course, with Fridays, and you have a great day.